Good morning, everybody. March 23rd, and here's the plan of attack. And it's my plan and how I'm looking to day trade 0 days expiration SPX options and ES futures. Or you even do the SPY if you want. I don't know. I've kind of gotten into the mode of where all I do is trade two setups over and over on one ticker pretty much every day. Um, who cares about the rest if you make the money you need, right? Anyways, that's what I think. All right, so starting from the top, let's look at economic data today. So we do see the Swiss came out with their policy rate, and it came out as forecasted, so that's already happened. What's up next is at 8 a.m. Eastern time. So, but yeah, 8 a.m. Eastern is about an hour and a half before they open, and excuse me, I'm all over the place right now. The Bank of England is having their bank rate statement coming out as well. So we had ours yesterday, the Swiss just had theirs, and then now waiting on England. Right, and then the U.S. has unemployment claims. After all that unfolds, then doesn't look like we have anything else in front of us. So then we could do drama-free trading or however else you wish to trade 0 days to expiration of whatever fashion. Now, if we know that, and if things stay as they appear in front of us, how can we take action? Well, like I've said before, where I feel I get my edge is I feel I have a decent ability to look at big picture and forecast what I expect the next candle to be, or in a sense, today's daily candle and how I expect it to close. Based off the information, where can I narrow in on time frames, take my entries with the expectation of how I expect the daily candle to close? Well, as of right now, the setup is clear, but we'll see if it sticks because anything's possible. But what I am liking right now is, well, for one, I was really I was really on Team Bull. Like, all right, let's get this thing popping and turn around and push higher. Once again, access was denied. We rallied up right up here into this HVA level, right? Got stuffed. Got a big bearish engulfing candle at a major moving average to the 50 days SMA. And we close at the lows engulfing the previous candle. So that's a reversal pattern at a level of resistance. So how do you trade a reversal pattern at a level of resistance? Well, you look for continuation to the same direction, as long as nothing economically could change that. If nothing economically changes that formation, then it may have followed through, basically. So all that being said, in a nutshell, what do I like? I like it's kind of tricky, but I like the bearish side. And the reason I say it's tricky is because we came right down to the 2-year point of control, and that's right where we stalled. So this is 2 years worth of data. Make sure I still got it yet. 2 years worth of volume, and this is the level where the most volume has transacted in for 2 years. And that's where we stopped. I mean, not to say we can't pierce right through it, as we've have jumped right through it before, but it's definitely a level worth watching. I do like the short side based off of like I said, the rally up into resistance, bearish engulfing candle, and then as of right now, we're just hitting the weekly VWAP is what we hit overnight. Crunches up, so we rallied up to it, hit the weekly VWAP, and we're starting to fail. But overnight price action, or as volume is concerned, is right at the weekly VWAP, and that's where we got the flush lower. And then if we look at the week, obviously all the volume occurred where price just chopped around sideways heading into the FOMC meeting. So nothing really, the reason I mentioned nothing worth that's in the way other than we rally to the VWAP and we're failing. So that's a pivot point. So if we're looking at that as a pivot point, we hit the weekly VWAP, we're failing, we're back below the daily 21 EMA, we're back below the 50, bearish reversal on the daily candle. After that, the only next step is to pull up our quick hits chart and know where we're going to take entry. So like I've mentioned, I do like the bearish scenario. As far as squeezes go, there's the volatility that occurred yesterday, shook out all the squeezes, the high compression squeezes that were forming on the hourly and the 30-minute. all fired to the short side, as you could imagine. But now that's occurred, a squeeze has to rebuild, and we'll see what direction we go from there. So that being said, there's no squeeze to make a play on this action after that pent-up energy was released yesterday. But today, I am thinking drama-free may be the way I'm looking to go today. The reason I'm thinking drama-free version versus a little bit tighter, things of that nature, is really all because of we have a bunch of moving averages right here, and I'm not convinced we're gonna have a whole lot of follow-through. So maybe positioning to allow some choppiness could be a good idea, and so that's kind of what I'm planning on doing. I'll probably go around a delta 20 to delta 10-ish, probably 15, and then make it wide, and then just let it work 3 times credit received and lock out the profits. But we'll see. But now, how am I looking to do all? How am I looking to enter the trade based off this information right here? So I'm looking to do a drama-free trade. When and where am I going to place those trades, or am I looking to place those trades? Well, bullish scenario. I don't like bullish scenario, so all I have is a bearish scenario. If it goes bullish, say we completely rally all the way up here again, I don't think I'm going to participate in it. It's tricky. You know what I mean? Big levels being reversed, things like that. I don't think that's the play for me. So I'm going to look for bearish plays. And at the moment, like I said, we came down to the bear market point of control. Larger time frame, we just got a sell signal against a skyline. We're through these moving averages. What I would like to see for a trade is really just a rally to the 30-minute 21 EMA. Get some dots and arrows, and this really just kind of short that rally. And since I'm doing drama free, it'll be out of the money, right? And just kind of look for it to at least go like this into the end of the day. Like when you're doing drama free, you're not really picking where you're expecting the market to go. You're picking where the market's not going to go. And it's kind of what I'm thinking. I'm thinking at least down, sideways to down is my theory today. But if we completely start to say this happens right here, so we fold down right here and we push up and it does this and this and this, that's kind of a tough one to take. I probably won't take that trade. So in a nutshell, all I'm looking for is probably just give me a little rally, short that rally, and then take it back down to sideways. That's my plan. Um, Not super complicated, but that's kind of what I'm looking for. But we'll see what happens. But yeah, I hope that makes sense. But let me do a quick little recap because I feel like I was all over the place there. Sell signals on the larger time frame, going into a bunch of moving averages. No squeeze occurring right now. The high-low is trending lower. Um, Looking for price to rally back up to the 30-minute 21 EMA and VWAP on the ES, and at that moment is where I'm looking to take a short entry to go sideways to down at that level. After that, what I'm doing is if price does decide to rally and push up through the VWAP and push back down, has to get through the hourly 50 EMA. That trade I don't really like doing, but that is a possibility that may play out, but I won't take it. But that's something that may happen. I like the bear scenario more today. But that's all I have for y'all. I hope y'all have an awesome day. Be patient today. I feel like I say that every day, but that's something you should do every day. Just be patient. Wait for your setup. Have a good day, everybody, and I'll talk to y'all again tomorrow. Take care.